Dear investment friends, spot gold traded steadily during Wednesday's Asian session, basically maintaining yesterday's gains. Currently, gold prices are hovering around $4,208 with no significant fluctuations. Although gold prices have regained upward momentum earlier, it should be noted that the upward momentum is still somewhat insufficient. Fortunately, they have been firmly holding above the key $4,200 level, maintaining a solid foundation. What everyone is most concerned about is definitely the Federal Reserve's monetary policy decision, to be announced today, which will be the key to shaping the subsequent market trend. Investment friends must keep these two key times in mind. At 3 o'clock early Thursday morning, the Federal Open Market Committee, FOMC, will announce the interest rate decision and the summary of economic projections. Immediately after that, at 3:30 early morning, Federal Reserve Chair Jerome Powell will hold a monetary policy press conference. This half-hour gap could trigger sharp fluctuations in gold prices at any time. For friends who plan to stay up to follow the event, remember to pay attention to the time difference and don't miss it. The market is basically convinced that the Federal Reserve will cut interest rates this week. So everyone's attention has shifted to next year's policy signals. Some analysts remind that the Federal Reserve may implement a hawkish rate cut, meaning that, although it will cut interest rates, the wording of the statement, economic forecasts, and Chair Powell's remarks at the press conference may all imply that the threshold for subsequent rate cuts will be raised. It should be noted that if the Federal Reserve adopts this stance, it may lead the market to lower expectations for 2 to 3 rate cuts next year. In that case, the US dollar may receive support, which in turn will put pressure on gold prices. This risk needs to be noted in advance. Let's also discuss gold's technical outlook. Looking at the daily chart, gold prices are still trading at familiar levels. A clear bullish signal is that the 20-day moving average has crossed above the 100-day and 200-day moving averages. All three are in an upward trend, and gold prices have maintained above these three moving averages at the same time. The Relative Strength Index, RSI, stands at 60, maintaining a short-term positive tone. Therefore, technically speaking, the key lies in whether the 20-day moving average can be held. If gold prices can continue to firmly maintain above the 20-day moving average, the upward trend will be sustained. However, if it unfortunately breaks below the 20-day moving average, it may pull back to the 100-day moving average at $3,792.65. If the downward trend continues further, gold prices may then target the 200-day moving average at $3,515.46. Both are important technical support levels. Disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading decisions made based on this information are at your own risk of profit or loss. Want to receive real-time interpretations of the FOMC decision and gold price trends as soon as possible? Subscribe now, give a like, and share with your investment friends around you. Subsequent analyses will be delivered to you in real time. Thanks for watching.